Hi, this is Zak Mir from Master Investor, the investor conference for CEOs in the know. I'm starting off with Afriag, where we can see the technicals here are building as expected and actually quite an encouraging way. We've got this bullish divergence line in the RSI window, which the oscillator just bounced off. Also, this extended support that the shares had from basically November along the floor of this rising trend channel from the middle of last year, actually as far as back as May there as well. But the highlights over the near term, first the clearance of the blue 50-day moving average at 0.36 pence, and then on a weekly close basis, the key 200-day moving average at 0.45 pence. Just took a couple of days to do that. The view now is that while we remain above the 200-day moving average, the share should start to accelerate to the upside, head back towards former August-September resistance around 0.7, 0.75 pence, with an ideal scenario that the shares would actually hit as high as 0.9 pence at the top of the channel from last year over the next 1 to 2 months. At this stage, only back below the floor of last year's channel, 0.36 pence, and the 50-day moving average would even begin to delay the upside scenario. Stock which has been has sort of a runaway move to the upside over recent sessions is JK Oil and Gas, which is clearly a plus in terms of those hoping that oil stocks and oil price will deliver a lasting recovery. The first thing to note here was the bullish divergence, sharp divergence here in this line from December in the RSI window, which took the shares up from very oversold levels. Initial break of the blue 50-day moving average at 14 pence. End of day close just 3 sessions ago there for the stock above that. And then the way these things are going, the initial target was around 30 pence. But even though the shares are very overbought at the moment, the RSI is at 90 out of 100, which is very overcooked, we could actually see a return or a push back towards the 200-day moving average in the top of this October channel at 39 pence over the next few sessions, even if that is the best that the stock can do in the near term. At this stage, probably Friday's floor for 21 pence is the stop loss on the buy argument, and that would, if we went back below that, we'd have to sort of think again in terms of the recovery argument here for JKX. Another stock which I've been following quite regularly over much of 2014 was Rose Petroleum, but they did tail off with the oil price, obviously, from September or October onwards. In the near term, we've got this December, February double bottom, bear trap double bottom from below the January support there. But what's encouraging here is that the way that the 50-day moving average looks to have been recovered on a sustained or a sustainable basis, that's at 1.8 pence. And at least while we remain above that feature on an end of day close basis, one would be looking for a retest of December resistance and the 200-day moving average at 2.5 pence. Above that takes us back to the summer resistance of last year at 4 pence on the top of last year's channel. But at this stage, simple sort of trade on, technical trade on offer in terms of the 50-day moving average and the 200-day moving average target. Moving on to Solar Oil, which is a stock which is also very much in focus in terms of the hot money on most of the time. Here we have this rising trend channel from August. Support once again, that's the theme of this video really, support once again at the 50-day moving average 0.51 pence. Above that and above the floor of this 2014 price channel, we should retest at least December resistance at 0.8 pence. Stop loss probably back below the 200-day moving average in last year's channel, 0.46 pence. What's interesting here in the RSI window is this triple test of this December uptrend line, which is a very encouraging feature indeed, and is actually quite rare. So that should be enough to take the shares higher, at least towards that 0.8 pence initial target. Finishing off with Zincox, which is sort of echoes a bit the type of chart we've seen at JKX earlier in this video. Break of the 200-day moving average, it's a familiar pattern now. That's a possible trend changing event. Above that at 9.99 pence, we'd be looking for further gains, even though we've already gained a lot over the near term. We're up from sort of 6 pence at the beginning of the year. Best case scenario target here is the top of the June price channel at 17 pence, and that would be expected over the next say 6 to 8 weeks, while the 200-day line is held. Any weakness towards that black line is regarded as a buying opportunity in the first instance. Probably the stop loss on the whole bull argument at the moment, the 10-day average at 9.37 pence, probably would be a comfortable stop loss there on a trailing basis. That's it from me. More updates at masterinvestor.co.uk.